Okay, welcome everyone. We'll start our lesson two. During our lesson two, we'll go through LO2, learning outcome two of this unit, which is be able to prepare, interpret statement of cash flow. So key focus will be on the cash flow. Before starting our lesson, we'll do a bit recap what we learned during our previous lesson. So just, today lesson key command verb is explain, analyze, review, and assess. These are is good to go through because in your assignment, these command will carry on using these. Okay, so next now recap what we learned during our lesson one. So we discuss about financial statements. How many types of financial statement we prepare in accounts? So we discuss about first statement is a statement of comprehensive income, or people called income statement, also known as profit and loss. And we said it shows income and expenses, and I showed you the layout of it. Second statement, we said statement of financial position, is also known as balance sheet, and it shows assets, it shows liabilities, and it shows capital. Or we can call equity if it's a company. Normally they have a share. So we call equity. Equity means shares, share capital. Third statement, which is statement of cash flow. It shows inflow and outflow of money. Today we'll go through further in detail. Under cash flow, we have operating activities. We have operating activities, in investing activities, financing activities. Okay. These are three types of activities where we can say operating mean the normal our business day to day, major our business, the cash coming in, cash going out. Investment mean maybe you have extra asset, non-current asset, which we can buy or sell, money going in and out. And financing activity, maybe we borrowing money through issuing share or through bank loan. So we can look around cash flows under each these areas. Next statement, statement of change in equity. Equity means shares, and we can look around dividend, how much dividend we paid. We can look around the revaluation of our assets, uh, revaluation of assets. We can look around shares. We have issued how many shares during the years at the start of the year. So that's, we can overall, we can say the equity position. So these are the four statements we prepared. Other than that, in our lesson one, which is already recorded, we also discuss about types of ownership. We said sole trader, partnership. We said company registered in the company house. We said charities, yeah, under charity commission. And we said Company Act 2006, we following Charity Act 2011, which is carry on changing, we carry on updating our, and the company Partnership Act 1890, and sole trader, no legislation. As long business is illegal, you can start whenever you want. Okay, then we discuss about IAS, International Accounting Standard 1, which is about preparation, presentation, and why these standards. We discuss about International Accounting Standard Board. International Accounting Standard Board, they set the standard. IFRS, International Financial Reporting Standard. And we discuss about IAS 16, which is about property, plant, and equipment, how we can treat them in the book of accounts. That was all in our lesson one. Any question? We all okay? Yes.
Yeah, that's fine so far. Yeah. Okay,
Okay.
thank you.
Today lesson really focus will be explain the purpose of cash flow. We look around the methods, how we can prepare, and how we can analyze the information really in the cash flow. Okay, we have 2.1, prepare a statement of cash flow. So what I'll do, I'll give you the data. We can prepare from the data, or we can prepare the statement, or we can use the prepared one to look around in assignment to meet the requirement of it. Statement of cash flow summarize all the movement of the cash into in the business during the accounting period. Accounting period always 12 months. And financial year is always 12 months. So financial year can be different dates like 1st April till 31st March, but the accounting period can be different. So we need to keep in mind the cash on hand or demand deposit normally include the current account, petty cash book, bank are equivalent to cash. Yes, cash equivalent. If you find any company financial statement, we look, actual company statement and we'll see the cash equivalents, how much the value of total. Cash flows, inflows, outflows, we look, in the cash flow. Okay.
Okay.
And cash flow statement we prepare under IAS 7. So what is the IAS? International Accounting Standard 7. Operating activities is what is like if it's a Tesco, what is a Tesco major business is consumer goods. Yes, that's the Tesco's operating activity. So any money coming in and going out through the sales and purchase, that will be clustered under the operating the normal business. But sometimes Tesco have a spare cash. They can look around buy an asset like a plant, machineries and things. So that come under the investing activity. Yeah. Acquisition and deposit of the long-term asset, which is mean non-current asset known as a asset mean anything you own it, anything has the economics value is your asset. Yes, asset mean anything you own, anything which flow the future economics benefit to organization is your asset. IAS 7 allow two methods. We have an indirect method, which is net cash flow from operating activities, and most we use this method. And then we have a direct method listed total actual cash flows. Okay, so what we need to remember, three activities: operating, investing, financing. The cash flows we'll see. Two methods, direct, indirect method. So that's we need to look around. Okay, this is this is the cash flow layout under direct and indirect method. And what we need to do when we look, the cash flows, we can start with the profit before tax, and that figures we can find from the statement of comprehensive income, or we call income statement. Then finance costs, which mean interest, depreciation, first place we adding back because the finance cost is come under the financing activities. So you're doing operating activities, so you do plus minus. Okay, dividend received is also under investment activities, gain on disposal, property, plant, equipment. If you have, you put it first place, add, then you do minus, increase in inventories or decrease. We do plus minus there accordingly. You have to look around the cash effect. Yes, if you have a more receivable, you have a less cash. If you have a less receivable, you have more cash. If you have a more inventory, you have a less cash. If you have a less inventory, you have more cash because your cash position really that is a crucial. The cash is a lifeblood for any business. Then the interest paid, how much, or the tax paid, how much we do minus, and then we can find what is the net cash flows from operating activity. And then we can go through the fund. But when we're looking the direct method, cash received from the customer, cash payment to supplier, cash generate from operation paid. Yes, tax paid is a direct method. You will see the few headings and other. Okay, so we can look around now. One question we've been given. This is our statement of financial position. 2 years like 20x3 and 20x2. Yes, so 2 years. So you will see there what's happened, the non-current asset 601,356. So there is an increase about assets. Current asset, you will see there is an increase, you will see the equity and on. We can compare these. And then what we've been given the income statement, you will see the profit for the year we have. And we've been asked to prepare the statement of cash flow from the figures you have from these two statements. So what we can do now, we can do some T accounts or we do workings. What we'll do first, we can say reconciliation profit from operating activity or cash flow operating activities. So profit from operation before the tax and interest. If we'll go back to our statement, profit before, yes, 177, you will see in the statement. So really we just transferring the figures, profit before tax and interest, yes. Tax and interest is this figure 197, and that's which we putting 19. Then you've been depreciation. If you look, depreciation we need to, yes, so we can find how much was the depreciation. Here we've been given during the year property plant equipment sold had original cost was 52 been sold for this, and rest is the depreciation, the difference between these two assets, and that's which we can look around the depreciation. Profit on disposal or loss on disposal, we don't have a profit because we have a loss. That's the first place we minus, now we are adding it back. Investment income, this is called other income, we minus. Inventories increase and decrease. So go back to statement, look around inventories. Inventory, what happened last year, this year? The last year was 113 and this year 1132. Take the difference of these two and you will see there is an increase of inventory. So increase will be negative inflow of the cash. You will see there is a 10. Sorry, yes, you will see there. That's the inventory. Then we have receivables. So these the way, and we can prepare the T accounts. Like you will see there, we can prepare the T accounts. Provision of depreciation, how much we disposal, how much balance was, and how much being statement of change in comprehensive income went, and the balance is 2. And we can look around, disposal, how much was. So we can prepare the T account, balance brought down, balance carried forward. Any question?
Sorry. The 3 activities affecting cash flow, and I think you mentioned the direct method and then the
Yeah.
indirect. Can you, I don't know if you elaborate on the indirect method again for me, please.
This is the method we are using, is the indirect method. Mostly we use indirect method, yes. Indirect method mean you show all the headings, yes. Okay, like this is the layout, yes. This is the indirect method. You starting profit before tax.
Okay.
You do adjustment and you can find net operating, then we do investing, then we do financing. Okay.
Right. Okay.
And the direct method, you saying how much money received or paid from customer or supplier. Yeah, how much is we generate, and then you putting the net activities. So mostly we use more indirect method. So
Mostly, okay.
you will see on this one, we have a net cash flows, net cash operating activity 224, yes. So we add them. So like if I look in the statement of comprehensive income, yes, you will see here. So income from other investment, you see there we add it, yes. So under operating activity, we minus it because this should become under the investing activities here, not under operating activities. Loss on the disposal of asset, we have a 11. That's the loss, but the loss this shows goes under the investing activities when we prepare the operating activities, yes, under the cash flows. First place we opposite 195, yes, we did the depreciation 82. 11 was the we said the loss, we minus first place on the income statement. but we add it back in the cash flow because that should go under the, because we are looking the heading of operating activities. Okay, which I'll show you in a minute when we'll go down. If you look, this is your investing activities. How much was the cash, net cash increase under the operating activity 224? But if we look under investing activity, purchase of non-current asset during the year, if you look the non-current asset figures went up. I gave you the T accounts increase and decrease at the start, at the end. So how much was 293? The cash went out, but we sold asset during the year. We have 20, the cash in. Income from investment, which we in under operating, we minus it, but we adding it. Then we have a purchase of the investment. Other companies, yes, we have invested money 62. It means the cash went out, it's our cash, but we not holding it in other companies because we're looking the cash position. And minus, you see there, yes. And you might, this positive figures, you have less, minus figures, you have more. So net effect, you have 328 pound went out from the business. Yes, cash went out.
Right.
Then we look the financing activities. So when we look the financing activities, we look under liabilities. If you look the liability, long-term liability, what's happened? Non-current liability last year, this year, 150, yes. And now we have two, there is an increase of 70. Yes. And if you look the equity, there is an increase 590, now is 848. Yes. So we can look around what, sorry, here is the equity 347 and 496. Take the difference. Yes. So if I'll go back to under financing activity, we proceed from the issue of the shares is 18. The cash we generate. If we look here, look under the equity 347 and 4496. Yes. And if you paid any other dividend, so you will see there the share capital that was 60 before, now is 72. How much is the increase? 12. Yes.
Right.
Share premium that was 24 before, now is 30. There is a 6 different. We don't do the return earning. Return earning means this year income, which we retaining. We only do two things: ordinary share and the share premium. Add them together, 60 plus 24, 84. 84 minus 102, 72 and 30. Yes. Take the difference and your difference will be here. You see there is a 18. Yes. That's the proceed due to the issuing. When we look the borrowing under the fund, long-term borrowing, which is you look the non-current liabilities. What's happened? Non-current liabilities, long-term liability, 150 and 220. How much is the difference? 70. Yes. Last year, this year, yes. 150. And that's the 70. So if you see here, the 70 pound cash went up. Why cash went up? Because you have liability went up. Yes. Your cash position is a positive. So 18 plus 17, you have a positive cash under financing activities 88. Yes. 224 plus 88 positive, and you minus figures, and net we have a this year cash increase is a negative, is a decrease by 16. Yes. How much was the cash at the start of the year? 24. If I'll go back to take you cash position, you will see here under the current asset, cash and cash equivalent. How much was there? 29. Yes. In 2002. And how much in 2003 to our 2013, we can say, yes, 20x. So is 30 now. So you will see there is a decrease in the cash. So 29 minus 13, how much is the difference? 29 minus 13?
1, is it correct?
16, yes.
Oh, 29. Yeah, sorry.
So if I'll go back to, you will see there is 13, yes?
Right.
16 was the net decrease this year, 29 was the balance, and at the end you have only 13, yes? So you will see
Correct.
the cash position for this year is a 13, yes? So only we looking where the cash been, the movement cash happen in the cash flows. Where been went in and where went out, yes? Under operating, financing, and investing.
Mhm.
Okay, because you never maybe prepare or learn is at the initially maybe you feel a bit hard, yes. But what we need to do, I'll give you the templates, yes. And
Okay.
and other than that, what we need to do, I'll show you one thing, just 1 second. Have we heard about Open Tuition?
No. Mm,
Okay, have we heard about London School of Business and Finance?
yeah.
So I'll share with you, you can set up free accounts, yes? It's a free. So if you want to watch some video to enhance your understanding cash flow, yeah, and
Okay.
I will give you. Okay, so I'll share with you in a minute. I'm just opening. Okay, so what we need to do, if you go here, yes, ACCA, yes, it's a free. So you can and look around under ACCA is FR, financial reporting, yes.
Okay.
If you click that, and you can download the booklet if you want. Every week you have been given the lectures. Okay, it's a free, yeah. Because
Right.
that subject is really good for you because you're working in accounts, yes.
Correct. Yeah.
And if you want to, if I'll go back to down, what we are doing, we're looking the cash flows, yes.
Yeah.
Okay, you will see chapter 1, chapter 2. Each chapter I have each lesson.
Mhm.
Okay. And that's chapter 1. Chapter 2, financial statement. Yes, you will see the chapter 3, which come cash flow. Chapter 4 is the cash flow. You see there? Yes.
Yeah.
So what you can do, this chapter, you can click that. Yes. And you can watch as well in details to further understand. Yes. But at least you understand, how many types of activity we have,
Yeah.
financing, investing, and operating. So that will help you to when you prepare. Basically, what you're doing, which software do you use at work? You using any software? Yes. As an account assistant, what you do? You enter the data in the system.
Yeah. We do that, and then we use it. Sage. I think it's Sage. Is that correct? Yeah.
Sage. So when you
Yeah.
entering the data, Sage automatically preparing for you cash flows.
Yeah.
If you look
Correct.
under the financial statement, that Sage automatically when you do customer invoices, supplier invoices, yes, nominal codes
Mhm.
that
Yeah. Correct.
that create for you. Yes, like you do 300, 3,000 for your capital. How you do, So that's, Okay, so what I did, I included the template for you here. Can you see?
Yeah. I can see that.
Okay, so when you prepare, so you can say, okay, I'm downloading that template, yeah, of cash flows, yes, and you can fill it, okay? This is the cash flows, yes. So net cash, you can do operating, you do investing, what's come under investing, what's come
Yeah.
under financing, and you can look around the movement, yes? And at the end, you can calculate the cash, okay?
Right. Okay.
Then we have interpret the significant performance to the cash flow. So we can look around increase and decrease the cash in the period. We can look around If we don't have a cash, what we'll do? We need to make arrangement overdraft, yes, with the bank. Yes, we can look around capital expenditure mean long-term expense like buying assets. We can look around the company have ability to pay the debts or not. If any investor want to invest in the company, they want to see these, okay? So we can look around here, one of the company, which is Morrison. Yes, you will see there Morrison. I included the link for you if you want to copy the link. Yes, you can look around actual company statements. Can you see all these figures? Hope you can, but I'll share with you slides later on. So you will see the cash from operating activity, what's happened in this period. That was last year, that was this year is 712. Yes, this is quite old statement. We can download the new one as well. 744, 712. You will see there is a decrease. Yes. Last year, this year, huh?
Yeah.
Both have a positive. I mean, that was 774, and this year is 712 under operating. But when we look investing, what's happened is more cash outflow this year. Yes, 431 million.
Correct.
When we look under financing activities, you will see what's happened last year, this year is cash. Yes, negative is cash went out because we settled the liabilities and the cash position is, and we can see the final figures, what's happened at the end. So you will see there the final figures here. Yes, have a net effect. Sorry, we have a net effect here, cash equivalent. Last year was 327 positive, and now we have a 264, yeah, million. And these notes in the statement, it's explain you full detail where this happened. Huh? So as long we have that knowledge, we can guide to client. Oh, this company normal position, the operating activity mean their normal business, they're generating the cash, they settle the liabilities. Yep, they invested the money. So their cash position, if they investing the money in the asset, it means the infrastructure they are improving. So that's, we can. Then we have a 2.3 make justified and recommendation. So we can look around the cash from operating activities start from the profit. We add back and we look around. Is it increase and decrease? We look around interest, how much interest are the tax they paid, how much investing activities we have. Yes, each of them is being, and we can look around what is the net cash position at the end. And why we need to look around the cash accounting concept, accrual, and the matching is used to complete the profit. In the profit is not showing the cash. Profit mean is a credit sale. If you selling somebody and you will get the cash in future, still you treating a sale, but that sale not give you any cash. So we do the cash, we're not doing cash accounting. We do the accrual basis, which is called matching concept. Yeah. Each year income and expense related that period we include or exclude. Yes. IS 7 says company need to be report their cash generation, their absorption during the year, and provide the information that will assess people their liquid position. It means the cash are near to cash asset. Statement of the cash flow is important statement user of accounts because this help user to liquidate and solvency. Yes, either the company, like Carillion construction companies or various BHS, British Home Store, it's not survive because they don't have a cash. They have building, they have asset, they have everything, but they don't have a cash. That's the biggest problem happen. Okay, that's why the cash statement is very important. And then 2.1 M is we look around the significant information within the script. So we can, when we'll prepare the assignment, we can discuss about cash flow. We can argue last year, this year, why this happened due to economic situation, due to the number of, we can see the tax payments. We can look around the goodwill of the company to ensure the effective balance management. We must inventory. If you have a too much inventory, too much stock, yes, on the new year and the boxing day, maybe we buying too much clothes, but we don't have a cash. End of the day, cash is a king. So cash is a lifeblood for any business or for individual as well. So we can look around, evaluate the usefulness of statement. Cash alert user, liquid problem. Cash show the well, yes, or the bad of the profit converted into cash. Cash is matters the fact are not easily manipulated, not affected by accounting policy, can help user to predict the future cash flow, easy to understand the profit. Some users, standard heading enable the user, yes. Limitation, cash balances can be manipulated by delaying the payment to supplier. These are the tactics to increase. It's a possible to focus on the cash flow at the expense profit. We can look around. Historical information is not necessarily reliable for the future. We're saying last year before COVID, but what's happened after COVID or during COVID, the cash position? Huh? Maybe we're looking last year, this year, what's happened. So we need to look around the economic position. While the business might is a profitable, this does not mean they will be able to survive because they don't have a cash to meet their debts, their payments, to pay the salaries, are meeting the stakeholders' demands. Yeah. So that's the key. The problem can be without cash. Okay, so what I did, I include for you example of the cash flow. So what you can do, copy this link, yes.
Okay.
In your time, please. That's which we need to do practice. And this is the little quiz, what we know about cash flow. So what you can do, copy and paste the link, play with the quiz, and at the end it shows you, if you say review, it shows you answer correct. So this way you can carry on testing yourself what you have your thought in the cash flow itself. Okay, and I included the link for you where you can find more stuff on cash flows. Yes, just click it and you can go through the cash flows.
Right.
Any question? So if we look now, so how many activities under cash flow? Yes. How many activities we have under cash flows?
So I think you mentioned what is it called? Cash statements, activities.
We mentioned 3, yes?
3.
What
Okay.
3? What 3 those are? Operating.
Oh yeah.
And financing, yes?
Oh yeah, correct, yeah.
So operating is a normal business. Financing mean borrowing. Yes. And investing mean selling and buying assets. Yes.
Right, okay, thanks.
And that's we call. And we cash flow we prepare under IAS. Which IAS? IAS 7. Yes.
Right.
International Accounting Standard 7. That's all. As long we remember, yes, and we can see the statements and the cash here is fine. So we have a basic understanding. Okay. Thanks for attending today's session, and next session, which will go through our LO3 learning outcome 3 next week. And I'm not sure, are you doing 2 as well, which is tomorrow class? Accounting.